Okay, I want to welcome everybody to People's Company Summer Webinar Series, and this is our first webinar of this summer, and we're going to hope you enjoy the webinar today and are able to pick up a few points that might be of interest to you. A couple of housekeeping things: we do have phones that are being muted, so you won't be able to ask questions during the actual presentation. If you are on the computer and have the ability to, you will have the ability to do the chat. If you go to the Q box in your upper right-hand corner, you'll be able to type questions in, and as those questions are received, we'll try to get those answered as quickly as possible. At the end of the presentation, we will allow people to ask questions, additional questions if you have any. So with that being said, my name is Terry Pauling. I'm the broker for People's Company, and I'm going to introduce to you today Ron Beach.
Unmuted.
The director of the separate account for People's Company. Ron, are you available?
Yes, Terry, I'm here.
Okay, let's get started then.
All right. Welcome, everyone, and thanks for logging into my presentation today about farmland investing. As Terry said, my name is Ron Beach. I'm director of the separate account land management division at People's Company. And I know there's people on today that are taking part in the presentation. Some are investors who are considering buying farmland for the first time, and there are those that are planning to add to their existing land holdings. And we have a few farmers on wanting to understand how they can secure more leased acres. The separate account land management program I'm presenting today focuses on three things. First, it's assisting investors in overcoming the hurdles of how to source land deals, especially those off-market deals that are typically going to be some of the better values out there. The second thing then is how to manage the asset for optimal annual income and value appreciation once you acquire a piece of ground. And then third, for farmers, how do you benefit by being able to add key tracts of leased ground to your farming enterprise through a source of capital that's being provided by the investors. Now, some of you maybe have never been to Iowa, but you've probably seen it this way. In Iowa and much of the rest of the Midwest, we're often referred to as a flyover states. But this is a picture of exactly why we're here and what we're talking about. It's because of the income producing, inflation hedging, value appreciating sound investment opportunity represented by those farm fields. And here's what's happening in the Iowa farmland marketplace. Mike Duffy at Iowa State University published that the average price of Iowa farmland in December of 2012 was $8,296 an acre. If you take that average and multiply it by the 30.7 million acres of farmland in the state, we have the total market capitalization of $255 billion. 26% of that is owned by people who are 65 to 74 years old. Another 30% is owned by people who are 75 years or older. And this statistic, while this is Iowa, it's really very similar across the entire Midwest farming states. So this demographic alone dictates that in the next 10 to 20 years, 56%, or almost $143 billion of land will be changing ownership in some fashion, and that's just in Iowa. So for those of you who want to invest, it's access to this $143 billion market of land that we're here to talk about. And for farmers, it's also about access, but it's access to capital for those farms you want to add to your operation, but you won't be buying yourself. Next, I have a couple short video clips for us to watch. Both are from the People's Company Land Investment Expo that took place in Des Moines this past January. Jim Rogers was the headline speaker. He's internationally acclaimed investor and author. He's president of Rogers Holding Company, and he was there for the 3-day expo. So in this first video, it'll be Jim being interviewed by Dagan McDowell of the Fox Business News Network. And in the second video, he's speaking from the floor of the expo. So let's listen to Jim's perspective of what's happening in the agricultural sector of the economy.
This financial situation is so bad. Why are people willing to lend this country money at a rate of less than 2% over 10 years? Jim Rogers can answer that. He's author of Street Smart's Adventures on the Road and in Markets and chairman of Rogers Holdings Companies. And he joins us, surprisingly, Jim, from the very fine United States. Usually you're on the phone with us from Asia. Good to see you.
I am delighted to be here, Dagan. Dagan, not only around the United States, I'm in Des Moines. I'm out here, looking at farmland. I've tried to tell you before, become a farmer.
Jim, you're not moving back to the States and going to farm land in Iowa. I doggone well know that. But why land at this point? And will you buy it with borrowed money? Which is great if there's an inflationary environment.
Well, if one can borrow money at a fixed rate, I would certainly urge them to these days and in U.S. dollars, because in my view, interest rates will certainly be going higher over the next decade or two, and maybe another drop first. But no, these interest rates are absurd and will not last. And why would I buy land? Because agriculture is going to be one of the most exciting parts of the world economy for the next 20 or 30 years, Dagan. You should learn to drive a tractor.
Well, I know how to drive a tractor, Jim. I probably learned before you did, even though we are from the same part of the country, sort of, since the South is one big state. Jim, talk to me about, and let's stay on the Treasury rates real quick. When is this going to come home to roost for us as a nation? Because, again, Congress and our lawmakers are getting a free pass and not really doing anything about our long-term financial situation because we can still borrow at such low rates.
Well, we can still borrow at such low rates because the Federal Reserve is in there buying bonds. This is an artificial development right now. And normally when central banks anywhere in the world do something that's artificial, it comes home to haunt them eventually, and this is going to come home to haunt us too. The problem, the situation, and I'm short government bonds right now. It doesn't mean I know what I'm doing, because I've tried it a couple of times before and not gotten my timing right. The problem, Dagan, is there may be more turmoil coming in the currency markets. You see what's happening with the yen right now. And if that's happened, a lot of people may put their money into the U.S. dollar and in the U.S. government bond market just because they don't know what else to do. It's the wrong thing to do, but they'll do it anyway.
Jim, you like agricultural commodities, obviously, because of you're buying farmland in Iowa. Jim, what about other commodities at this point? Some of your metals, gold here, it's been very volatile.
Well, first let me say I'm not buying farmland here. I'm here because of farmland, and I'm looking at farmland, but so far nobody sold me any, and I haven't bought any, but it's certainly a spectacular farmland in various parts of the world will be great investments going forward. As far as metals are concerned, I own silver, I own gold. I'm not selling my silver and gold, Dagan, by any stretch of the imagination. I'm not sure it's time to jump in. I'm not buying at the moment, but if they go down, I assure you I'll be buying more.
Jim, it was great to see you. As always, be well. I'm glad to see you in this neck of the woods compared to where you usually are. Jim.
Thank you, Dagan. Thank you. I'm going to go out and look at some farmland now.
All right, you keep us posted now. Jim Rogers, be well, Jim.
Okay, and now we'll hear Jim talking directly from the Land Expo.
Here in Iowa at the Land Investment Expo, Steve Brewer's conference. I have to tell you, it's been going on 6 years. It's been a great success story. I've been amazed. I've been extremely impressed. It's a very good operation, and the bull market in Iowa land has got a long way to go. It will come to an end someday, but it's certainly the right place at the right time. And I've learned a lot being here, and I'm glad I came.
Okay, it's motivating for me to hear a world-renowned investor like Jim Rogers identifying what I really consider my sector of the economy as being one of the best investment sectors of our time. And that's because I have a lifelong connection to agriculture. My childhood and youth was spent living on and working on our family farm. My college education, I studied business and agriculture at Iowa State. And now my 30-year professional life has been directly engaged in multiple facets of the business of agriculture, both in the U.S. and abroad. Steve Brewer is president and leader of People's Company. He also has a lifelong farm background. When Steve bought into People's Company, he was just out of the real estate program at the University of Northern Iowa. And at that time, People's was a small land brokerage and management company doing business just in south central Iowa. And Steve's led a transformation over the last 10 years, making People's Company a major influence in the business of farmland in Iowa and Illinois, and licensed in Minnesota and Nebraska, Missouri, Montana, and North Dakota. At People's Company, we recognized that there was a challenge faced by both investors and farmers. And we also recognized that the land brokerage and farm management community wasn't adequately addressing these needs. And in response, we designed the separate account program and now have a team of 10 agents and managers who are dedicated to the program. So for you that are investors, the question is, how does this team at People's Company help you to ultimately be successful placing a portion of your investment into farmland? And for farmers, how can we be a source of land capital for that you can then lease? Well, it starts with our industry professionals, and it's that team of 10 land agents and managers dedicated to the program. It's your team, it's your local network, and how you confidently acquire and manage your investment in farmland. This team has expert market knowledge. You know, they know the markets where the land's located, they know the land and the returns it can generate, and they'll use that marketplace knowledge to gain you access to sound investment deals, which we see as the #1 indicator of your success as a land investor. Because we like to say you'll make your money the day you buy, because your overall return is going to be highly correlated to your ability to purchase right. So it's this triple combination of industry expertise, market knowledge, access to the right deals, that's what we bring to the table. Next, let's take a look at some of the drivers of land values and what's driving land values right now. As we go from a world population of 6 to 9 billion over the next 40 years, that means we're going to have an additional 219,000 new mouths to feed on a daily basis. We have very low interest rates that continue to be a positive driver of land prices. Presently, 40% of the U.S. corn crop now goes for ethanol production. As far as grain supplies, in 8 of the last 13 crops worldwide, production of grains and oilseeds has failed to meet demand, resulting in the lowest inventory of food in several decades. And although it's called crop insurance, it's really a revenue insurance, and it generates a pretty generous floor under farm incomes, which effectively has created a floor under land values and rents. That's why, despite the drought last year, farm income and land investments continued to perform well. And of course, inflation, with worldwide printing presses cranking out dollars and yens and euros, and U.S. banks sitting on nearly $2 trillion of excess reserves. Inflation fears have been driving investments into inflation hedging assets like farmland. So it's a fundamental fact that the demand for the production from farmland is continuing to rise worldwide, while cultivated acres per capita have been declining for the last few decades. What about the other side of the coin here, about the risk? Again, interest rates have been very low, and they've been a significant factor, so the next move I think we can expect obviously are going to be higher. And perhaps it's started rising just a little bit here recently. The current land prices are at historic levels in a lot of markets, so the question is, are the fundamentals there to keep it going or not? You know, in that last Jim Rogers video, he said the bull market in Iowa had a long ways to go, but only time, I guess, will tell. There's supply and demand issues. Here the argument goes that the present higher prices will incent additional production, therefore increasing supplies. High prices, on the other hand, will also decrease demand from livestock, ethanol, other end users. And then you could throw in a possible demand erosion from potential slowdowns in Europe or China, or the strengthening of the dollar, if that were to happen. So that means a higher supply, lower demand scenario. We end up with lower prices, reduced farmer profits, which would lower demand for farmland and moderate some of these cash rent increases. Another concern would be debt deficits and taxes. The direction of these factors, the politicians' response could result in additional recession, slower economic growth, continued high real unemployment. That would all be a drag on the entire economy, including agriculture. So really the bottom line is, I don't know, and People's Company doesn't know how much land will appreciate this year or next. We don't know if and when a correction will happen or to what degree. But our advice is you invest in farmland because it makes a great addition to a long-term, diversified, balanced investment portfolio. Next, I want to take a look at some of the features of land as an investment class. So there's two components to the return on land. It's annual yield and its appreciation. Using data from Mike Duffy at Iowa State University, we completed an analysis going back to 1970. Here at the chart you're looking at, you have blue bars and red bars and the green line. First, the blue bars. This is the annual return from the rent. And what you see there is that there's always an annual positive cash yield. There is no vacancy when it comes to farmland. Next, let's look at the red bars. What that's showing you is the appreciation from one year to the next. Now take a look. Only 8 years of the 42 did the red bar go below 0%, which then represents a depreciation of value from the previous year. Then finally, the green line shows that's the sum of the red and the blue bars. And I don't know, you've probably heard the farmland referred to as gold with a dividend. And it's because of that red bar. It's because while the red bar is the inflation hedge portion of the investment, the blue bar, that acts as the dividend, which significantly brings down the volatility of the total return. So if you go back and look at those 8 years of depreciation, only 4 was the total return negative, or the green line. So that's a positive total return 90+% of the time in the past 42 years. So if you take a look at the average yield over that time period was 6.24%, with appreciation averaging 6.6 for a excellent proven total average return of 12.84%. This chart will take a look at how farmland compares to several other investment classes. Now the graph was prepared from information provided by Dr. Bruce Sherrick at the University of Illinois. And again, it's based on the time period of 1970 to 2011. You'll see from this graph it depicts the relative risk return of Iowa farmland compared to several other investment options. If you look there, kind of clustered on the right are real estate investment trusts, gold, some European and Asian investments, and then the S&P 500. And kind of clustered more to the left-hand side, you've got some treasuries and munis, some corporate bonds, those type of indexes. So what this shows is that farmland occupies a pretty unique investment space with higher returns and moderately lower risk when you kind of line them up against these other several more traditional investment choices. And again, it's that consistent positive annual return or dividend that really decreases the volatility of the farmland as an investment choice. So that brings me to talking about farmland as a diversification strategy. These charts and the one on the next slide are also, we worked with Dr. Sherrick at University of Illinois to produce these, and the time period again is 1970 to 2011. In Portfolio 1, we took some U.S. Treasuries and U.S. equities and looked at that over that time period, what it would return. And then in Portfolio 2, we added a small 10% diversification into Iowa farmland. And you'll see that both the return went up and the standard deviation went down, and standard deviation being a measure of the volatility. So we said, okay, if you had $1 million portfolio, and if you invested it in number 2 versus number 1, after 20 years, you'd have an additional $400,000, and after 30 years, almost $1.2 million additional. We did that game again. This time in Portfolio 3, we had a bit of a more balanced portfolio. We added some real estate investment trusts and some European and Asian equities to the treasuries and U.S. equities. Again, we put in a 10% diversification into Iowa farmland. really very similar results. The returns went up, the standard deviation went down, and that portfolio returned, that portfolio 3 over portfolio 2, I'm sorry, 4 over 3 returned an extra $400,000 over 20 years and 1.2 over 30 years. So a farmland diversification strategy, it can increase the return on your investment while at the same time decreasing risk. And then I put in one more about diversification. Here across the top, you'll see if you invest $1 million at 7%, have it in there for 10 years, you'll have almost $2 million at the end of that 10 years. Now, if you break that $1 million into 5 $200,000 tranches, and one of them you put in at 20%, another at 15%, the third earns the 7%, the fourth one you don't earn anything, but you do get your principal back, and finally, on the last one, you lose it all, even your principal. Under that scenario, you still get 34% more than just staying in that one investment at 7%. So now we're going to turn to the options investors have for adding land to your investment portfolio. And I believe there's 2 fundamental issues you need to deal with before you even start the process. And the first is acquisition. And the question there is, how will you source transactions and know you're making a sound investment decision? And the second is management. Once you have the land, how are you going to assure your investments managed for both income and depreciation optimization while managing all the uncertainties inherent in owning a piece of farmland? Well, the first thing an investor realizes when they step into this world of investing in farmland is that the market is not an efficient, the farmland market is an inefficient and imperfect marketplace of information. It's not like the financial or commodity exchanges. In those exchanges, there's massive amounts of real-time information that's constantly available to everyone. So our team of land agents and managers will be your source of on-the-ground, real-time marketplace information. And this is what the land market looks like often. You've got similar farms in the same vicinity transferring at significantly different prices. Now that could be due to fundamental features of the property, or, as often is the case, it's because the market knowledge is closely held and really very localized. The higher price deals typically come from auctions or other transactions that are well exposed to the market, while the more moderately priced deals, a lot of those result from off-market private transactions, and those are the ones we like to target. I believe the land market in a lot of respects is similar to the airline ticket market, because you can easily have 20, 30% difference between your seat and the person sitting next to you when you're on an airline. But with the high dollars and the long-term nature of buying farmland, you just can't be that guy in the higher price seats. So you need to have someone who's working for you to identify the better deals. And that's what we do, is we try to cut through this marketplace confusion and provide access to these better off-market deals and other sound investment opportunities. So once you do make an investment, then what? Farming today is not simple, and or an unsophisticated business. And so neither is managing that asset, because farming is managing tremendous amounts of capital. It's agronomic science, plant genetics, soil science. You've got high technology with global positioning, automatically steering tractors to the fields, while computers are applying fertilizer prescriptions literally on a foot-by-foot basis. And like a lot of businesses today, it's also managing complex array of government regulation, rules, and programs. So your asset manager needs this very specialized experience and skill set so that they can evaluate, choose, and monitor the tenant, operator of the asset, to assure that you're obtaining your optimal returns. With People's Company Farm Managers, your investment is going to be managed by professionals with decades of personal farming experience. And to you that are listening that are farmers, our farm land management services are not designed to have our asset managers out there making every management decision with you or for you. We're going to spend time up front identifying top operators that utilize up-to-date technology so that they can provide the land manager and landowner the data they need to evaluate your performance and make sure that both parties are in an equitable leasing situation. So if you're ready to start looking for farmland, where do you turn? What are your options for investing in land? Do you call your stockbroker or financial planner like you would for other investments? You know, it's hard to imagine that they're going to have the localized marketplace knowledge or asset management skills that are going to be required. Then we heard Jim Rogers tell Megan McDowell, learn to drive a tractor and become a farmer. I think we know that was in jest. Now, you could go it alone. That's possible. You could Google real estate brokers and start making connections and phone calls. And that's really going to require a significant amount of your time to source transactions and make relationships, let alone attempting to manage the asset. And even then, are you going to have the relationships to source the better deals, some of those off-market things? Or are you only going to know what that real estate broker has listed? Another option is you could invest in farmland fund or a partnership. There's several gotten started in the past few years. Here it's a bit different though. Your investment proceeds are aggregated with other investors, so you're actually acquiring shares of an investment fund as opposed to direct ownership of farmland. So it's not going to be quite as flexible in meeting your personal goals, and some of those can tend to be kind of expensive in terms of fees and things like carried interest. And then as the ag economy has performed well, there's been several other groups getting into farmland at this time with variations of direct ownership. A lot of these are not located on the ground where they'll have direct access to the market information and deals that we believe are necessary to perform well. And again, there can be some high fees, very high minimum investments, and some very long-term management commitments. So what happens a high percentage of the time is when an investor thinks that they want to start looking at farmland and that it could be a good investment, they run into some real or perceived information or knowledge hurdles, makes them uncomfortable and with that whole investment class, and so they end up doing nothing. In addition to the challenges and hurdles I've already covered, there's a lot of other specific pitfalls and uncertainties that need to be managed. There's things like floodplain and environmental concerns. There can be zoning or easement issues. Then you've got the whole fertility, erosion, farmability consideration. So these are factors that must be competently managed to optimize return. And those that have a full understanding of these factors, they really possess a significant advantage, I think, over those that don't. And really addressing and understanding these uncertainties and risk is what we do on a daily basis. So it's an advantage we offer investors that do choose to work with us. So now let's turn specifically to the separate account land management program. The decision to design this was born out of a repeated challenge and frustration we had with trying to help a farmer maintain his base acres while simultaneously trying to assist an investor in sourcing and managing land deals. The recurring investor scenario would go something like this. We'd have an investor call, want to buy a farm. So we start looking for properties that might fit their goal. And maybe they fly out here to Iowa. We look at farms. We attend an auction, and the auctioneer blows right by the target price. They fly back frustrated, discouraged. This might happen another time or two, and finally they decide that maybe farmland investing isn't worth it to them. Then on the other side, the farmer's facing the dilemma of when and how much land to buy. Farmers are always asking the question, when's the right time for me to buy a farm? Well, really the answer is pretty simple. The best time to buy a farm is when it's for sale. But as a farmer, maybe you just bought a farm and aren't ready for the next investment, or your landlord informs you they're going to sell that half section you've been farming for 20 years, but you can only bite off half of it. So with that $143 billion of land in Iowa that we just talked about that's going to change ownership in the next 10 to 20 years, farmers simply don't have all the required capital it's going to take to fund that kind of a asset transition. So what we've done is effectively created a program where People's Company can act as a clearinghouse. We've created a queue of investors on one side and a queue of land deals, so that matching these up and the timing has increased dramatically, and it's a system where we actually get some deals done. Key component to the separate account program is our relationship with farmers. The farmers really are often the first to know of a landowner's intent to sell, and it's this first to know status that's proven to be key to striking some of the best off-market deals that we've been able to do. So investors understand that if a farmer's in a position to buy the land, they're likely going to do it. But as we've covered, the sheer volume of acres and dollars involved have some of the sophisticated farmers asking us to help find capital to own the land, lease it to them so they can continue to expand their farming enterprise. And for those that are farmers, understand that if you bring a deal to the table for $10,000 an acre and you propose to rent it for $250, we're going to have a pretty short conversation, because the separate account program has been designed to put together fair deals for the farmer and the investor and to create long-term equitable relationships for both parties. And what I've seen happen is once an investor gets into a relationship and is comfortable with a farmer and the farmer's doing a good job, when they're ready to make the next investment, they'll call up and say, Ron, I'm ready to make another investment, but I'd like to buy it where close enough to my other farm so that the farmer I'm doing business with can farm it for me. And that's the type of long-term relationships we're out to create. So this is a diagram of the separate account land management program. Investors, these are the steps we'll take you through. You can see that it really boils down just to identifying your investment parameters and goals, identifying sound opportunities to capitalize on, and this is a step where the farmers are key, is in identifying those opportunities. And then we negotiate, close a deal, and start managing your asset for you. So throughout this whole process, People's Company, we're your management team. We're your agent. So we're going to guide and oversee every step of the process. If you contact a real estate company and try, do this on your own, tell them you want to invest in farmland, really what are they going to do? They're going to immediately try to sell you what they have listed, because they're incented and bound by their listing agreement to obtain the highest price possible. They're representing the seller. By utilizing the separate account program, People's Company will represent you. We're your agent, and we work for your interest. Understand there might be times when a People's Company agent has a listing that fits your parameters, and of course, if that's the case, that'll be 100% disclosed, and you'll know what's going on. So in summary, separate account program is a simple, straightforward, comprehensive, economical approach that allows an investor to confidently deal in the farmland acquisition and management marketplace, and it's a source of needed capital for a farmer to be able to keep or add desired land to their farming operation. So lastly, I've got one more video clip. This one's Warren Buffett, who comments about all the gold in the world versus farmland.
You offered me the choice of looking at some 67-foot cube of gold and looking at it all day, maybe touching it, fondling it occasionally, and then saying, do something for me. And it says, I don't do anything. I just stand here and look pretty. And the alternative to that was to have all the farmland in the country, everything, cotton, corn, soybeans, 7 Exxon Mobils, just think of that, and $1 trillion of walking around money. Maybe call me crazy, but I'll take the farmland and the Exxon Mobils.
On this side, you'll see my contact information. So with that, investors, if this is an answer to some of the hurdles you faced in identifying, acquiring, managing an investment of farmland, please make the contact. And farmers, if it's a program fills a capital access need for you, please give us a call. That's the presentation. I thank you for your time and attention, and I'll turn it back over to Terry and see if there's any questions.
Okay, thanks, Ron, for your presentation. Does anyone have any questions? There weren't any typed in while we were going through the presentation. Oh, here's one now. Does people help with the land financing? Ron, do you have an answer for that?
Well, we don't directly provide financing, but we've got relationships with banks throughout through the whole area, and the farm credits and the Farmer Mac. So in that way, yes, we can help identify lending sources.
Okay. And another question, what fees are associated with the account?
Okay, good question. In the separate account, we ask that to take part directly in that program that the investor wants to invest at least $1 million. What we ask is when we sign the engagement is that a 1% commitment fee up front, and then you have access to all the deal sheets and things that are coming up. That will be credited when a deal takes place. So that commitment fee is credited. So the overall cost is going to be 3% to the buyer to get the transaction done and make the acquisition. And then there's an ongoing annual management fee, and that can be in that $20 per acre range.
Okay.
You know, there's a little bit of give there, give or take, on that management fee, but that'll all be stated also in the agreements that are signed when you sign up into the program.
I know there's some interest in self-directed retirement accounts. Is there a process that people can do to invest that money in farmland?
That's a great question. Yes, there is the short answer. We've had a lot of interest in that recently, had a lot of questions. And so I'm going to flip back to this slide. You'll see a week from today, our next webinar will be on that topic exactly. But we've worked with, identified and worked with Midland IRA, because the first thing is to identify a custodian that understands that, knows the rules and regulations and can make that work. There's not too many out there that do it, so we've been lucky to have identified those people, and they'll be joining me next week on the August 8th webinar to discuss that particular topic.
Okay. Another question here, how long does it take from getting into the program until an investment is made?
That will depend.
Really, is there a standard answer? Probably not, is there?
There's not, and some of the things that will, because what's available and what deals are out there change on a daily basis. But also, what are your parameters? Do you want a certain, I want to invest in these 5 counties in Iowa, or do I want to invest anywhere in the Midwest? So a lot of that's going to depend on the size of the deal you want, the return you're looking for, the general location. That's why back on that slide about the process, you'll see the first step is to identify what your parameters are. And then once we know those, we can probably give a better indication.
Okay. And as far as using 1031 money into a separate account, is that possible?
We do it regularly. Yeah, that's a big part of it. A lot of times investors have that money. They come to us. They've sold some other assets. Maybe they sold some farmland. Maybe they sold a business and want to put that money somewhere else. So as long as it's I said a business that they, as long as some of that money was real estate, and we can change into real estate. But we work with some very knowledgeable 1031 exchange professionals to help guide through that. But the important thing is get all that done and all that paperwork done up front before you start moving any money around from any of your transactions. But we do that that's very, very common.
One more question here, talking about how are deals allocated when we're serving multiple investors?
Good question. We have a process, and the short answer is first in, first out. So, we know in what order people have signed up for the program and come to us. And so when a deal comes up, if it meets your parameters and you're first in line, you'll be the first one to have the opportunity to pull the trigger on that one. So when an opportunity comes up, we'll complete some analysis, show you what the return looks like, show you our analysis on the property, and if you're the first one whose parameters meet that particular opportunity, you'll be the first opportunity to say negotiate it or not. If you pass, we'll go to the second person and so on.
Okay. Well, that's the last question I have that's typed. Does anybody have any other questions?
Have they been unmuted?
Everybody's unmuted now, so does anybody have any questions?
Okay.
Not hearing any. Well, I want to thank you, Ron, for the presentation. Thank everyone for joining us and making this a good thing to listen to and to learn about. And keep in mind that next week we'll be talking a little bit more about land investment opportunities in IRAs. So hope to have everyone back next week and to learn a little more.
Terry, before everybody jumps off, I'd just like to mention, I mentioned the Land Expo with Jim Rogers last January. This January 24th will be our Land Expo, and T. Boone Pickens will be our headline speaker. So watch your mailings and let us know if you'd like to attend that event.
Okay.
Okay. Thanks, everybody.
One last thing for everybody. Our presentations will be available on our website. Normally they'll be available around Tuesday the following week, so you'll be able to go back, or if somebody who wasn't on wants to listen to them, they'll be able to.
Muted.